The Asian tiger that once roared the loudest is facing its greatest slowdown in the last quarter of a century. Both exports and imports are reflecting this sluggishness in China, but what will it take to really get the economy back into high gear? Economist Roger Nightingale joins me. Everyone wants to talk about the China growth story, but it's really now a slow growth story. How long are we going to be in this position?
I suspect that the Chinese authorities have either deliberately or possibly accidentally miscalculated the growth of the Chinese economy.
You project it to be closer to 3% per annum. Very far from the 7% projected by the government. The government is only willing to acquiesce to a point where it says, we hope and anticipate that we'll be able to reach that target, but no guarantees. So what does that really tell you about the story that the Chinese government is trying to put out there?
I don't know enough about what goes on in Chinese politics to be able to interpret that correctly. I don't know whether the Chinese authorities who say those things really don't know what's going on in their economy, or do know what's going on in the economy and are trying to put a brave face on it.
What we do know is that the Chinese government has put forward one of its most prominent economic leaders in the country. The premier of the State of the Council gave an exclusive interview to the Financial Times. No question was restricted, no editorial control. The focus very much was on what is the story coming out of China. In that interview, he was willing to admit that there is no guarantee that the markers will be achieved, but what the world can expect is that the focus will be on stabilizing growth over the long term, right? So that is a message not just for people in China, but very much for investors outside, not to rattle the economies of the world, but to make sure that there is stability. Why should anyone keep their money in China?
Since the so-called crisis 6, 7, 8 years or so ago, European economists, American economists, Japanese economists, the governments in those countries, the central bankers in those countries have been trying to reactivate their economies. They've all failed. The Chinese seem to get some degree of success in the first 3 or 4 years after the initial crisis. But it looks to me, and it looks to many people who look with unblinkered eyes, as if things have gone wrong again in the last 3 or 4 years. And I'm surprised that the Chinese authorities aren't acknowledging more frankly the slowdown that's occurred in the recent past.
Let's look at some bare bone facts. HSBC, of course, put its Flash China Manufacturing PM Index out. In that index, it reveals that production has only increased marginally. What power does the Chinese government have other than devaluing its currency?
It has almost no power whatsoever to control economics. Most countries find it very difficult to control their economies. I like your reference to HSBC's flash analysis because nearly everything there shows you that the growth is negligible. Certainly not 7%. Probably my own figure of 3% is too high. The most recent data suggests that there is no growth whatsoever in the Chinese economy. And indeed, that is supported by the imports numbers. And let me tell you that import numbers, in my view anyway, are the most reliable, the single most reliable indicator you have of domestic economy.
What you're presenting here is very much a doomsday scenario, right? You say in a recent report that you believe a recession may have already started in China. Is that overstating the significance of the economic plight of a giant in the economy? I mean, this is the biggest economy. It's surpassed the US.
Yes, indeed. It may be. And I will quite willingly admit I'm wrong if in fact I turn out to be wrong. Most economists are wrong most of the time. Go back to the 1930s depression, and if you look at how countries fared in that depression, you will find by and large that the better that the country had done in the period prior to the depression, the worse it did during the depression itself.
China could be heading in that direction, right? We've got a suppressed domestic economy. Manufacturing isn't taking off. Exports are going to be impacted. Obviously, a domino effect is what we could be facing according to the scenario that you have put out. So let's talk about what the Chinese can do moving forward.
The only thing that the authorities can do that we know works to some degree is to ease money. Cut interest rates, go for quantitative easing, go for injections of liquidity into the banking systems. That does work most of the time. The trouble
But
is,
then you'll have inflation, you'll have all of these other cut-off effects.
the problem is not the inflation. The problem is that it doesn't create all that much real activity when the people, the companies, are predisposed to be cautious.
But isn't that what he's doing? Hyperactivity is what is required by the government to really be more aggressive in terms of promoting its local sector. In him doing this interview, I would think this is the Chinese government's effort to tell the world to keep investing, to keep putting its money in its local economy.
I think that's what the Chinese authorities would like, because they know that if the money no longer comes from the rest of the world, activity in China will be even weaker than it is at the moment. So they want to convince the world that things are still going well. The problem is that things are almost certainly not going well, and that at some stage, when the rest of the world realizes the gap between what they thought was happening and what actually is happening is as big as it is, the reaction will be much bigger. They'll withdraw money. They could intensify the setback in the world economy because of the misinformation that's been injected into the system at the moment.